Good morning, everybody. Hope you had a great evening. It was delightful here in Wichita. We had temps yesterday just pushing 90, very low humidity, and really made for a nice evening on the deck when I finally got to it. So, supposed to be in the mid-80s today, and rain rolls in tonight, and in the mid-70s tomorrow. So we'll take the moisture, and we thank Reg for the cool air. In the end of July, as always. Hopefully people east of the Mississippi will get some lower humidity and cooler temps too, as forecast. So much for global warming. If you look at history, global warming is not such a bad idea or concept. Humans flourish. We produce more food, less disease, spend less time trying to keep warm. So global warming is not such a bad deal, all things considered. The issue, of course, is not that temperatures get warmer for periods of time or cooler for periods of time. It's who causes them. And the governments and various political factions around the globe like to say that man causes those so they can increase taxes, increase control over their fellow man. So it's a game that everybody's pretty well aware of, but it seems like most of the time you can't do a hell of a lot about it. So here we are, ready to trade today. Tomorrow's news, ADP employment, FOMC announcement, and second quarter GDP. So our news focus this week is GDP first, then FOMC, then Friday's non-farm payroll number. I put an article, or a part of an article, up in the room showing that as far as earnings announcements go, 78% of those reporting are beating their earnings per share, and 65% are exceeding sales projection. And that second number, 65%, that's welcome news. We'd like to see everybody exceeding their sales projections because we need to put people back to work. We get right down to it. Today's news, Case-Shiller plus 9.9%. And then consumer confidence at 85.5. The focus will be consumer confidence. Then, for our markets, it'll move to the 5-year auction. And yesterday's auction took place at 4. So I like the long side of the market. I'd like to buy below 4 if at all possible, as close to 125 as we can. But we may have to pay up. Buy 1 is going to be 1 to 5. Buy 2 is going to be 25 to 29. I think the market is going to trade higher. We've got really, really good selling, as you can see, up in the 25, 13, 14 area. So I'd like to sell 11s to 15s today, and I'm prepared to wait for it. But top of value is 9.5, so this 9 area might be an area where we have to engage the market. If the market stops during the day session in the 9-10 area, then we got a pretty good shot of getting in at the buck. And then 19 to 23 will be sell too. So the 5-year auction is today's focus. And then tomorrow we'll have the 7-year auction and the 2-year floating rate note. Like I said, the dealer participation, dealer Fed manipulation of prices. Yesterday they did it by call buying, is what's holding this market up. There was one article out saying, look for 4% interest rates come fall. That would happen in a hurry if it did. So, I mean, there's just all sorts of supposition, all sorts of talk about what can and what could come. And it's the same thing that you face once your friends know that you trade when you go out. Hey, Charlie, good to see you and everything. What do you think about the market? Oh, I like it or I don't. Charlie, where's it going? Quit screwing around. And what's the number? Is the Dow going to 20,000? I mean, that's where they want. And then they'll want to know when. So everybody wants to know what's coming tomorrow with great specificity. So here we are again, 23.27. Sell one, pretty much where we were last night. Then 31 to 03. And on the buy side, we keep it where we did last night, 9 to 13, buy one. And then 1 to 5 for buy two. We hit that one pretty well last night. Okay, the knob spread, we said we'd watch it this week. This is the first time we've been into it with the market rallying. Yesterday morning we started off at 13 plus 7. We closed yesterday at 05, pretty much unchanged. This morning, real early, 6 cent, around 5:30 Central 6. It's at 13.14, so it's picked up 7/30 seconds. And like I said, we're monitoring it this time to see if it does work when we rally into the auctions. But it's been a really good play for us. It has made consistently half a point to a full point for those that have taken the trade. So it's a good trade. It's one that you should have in your repertoire. And you can lock in a spread with your broker. You can have it designated as such, and you don't screw up your day trading. Okay, gold, still in a trading range. It was higher last night. We went out gold last night wanting to sell 8s to 10s. The high was 12. Our second sell was 13 to 15. So it almost got to our second zone. And we find ourselves at 08. We had a buy yesterday at 1300 plus or minus. So it's riding about $3 higher than where we saw it on yesterday's close. So we've got resistance is at 10, so 10 to 12 is sell 1. Sell 2 is 15 to 17. I don't think we can break it out with the news coming tomorrow and on Friday. And on the buy side, we'll make 3 to 5 buy 1. Just play where support and resistance are. Real time, and not going to worry about too much more than that. The Europe is strengthening their sanctions. They are sanctioning Russia's, I think, 5 individuals that could be profiting from the war in between the Ukraine and Russia, and they will allow advanced drilling technology for natural gas to go to Russia. Why? Because 30% of their natural gas comes from Russia, but they're going to restrict the advanced technologies and equipment for crude oil production. And why? Because they have extra sources of supply and they just have to order in a few more tankers to meet their needs. It is really difficult to miss the cynicism and the double standards and the double speak that we get out of really pretty much all governments these days. And we have a bureaucracy that's vested in maintaining the status quo. We have corporations that are at the top of the cash flow pyramid. They're mature industries that have the money to finance or get most of what they want for short periods of time. That keep the bureaucrats and politicians happy. And it's a pretty tough system to bust into. So right now, what we see is probably what we're going to continue to get. Okay, crude oil hit resistance. We were hoping to sell 102, 102.75. I mean, 102 and a quarter yesterday. The high stopped just at 75. We had our buy against 101, so we'll lower our buy to 75 to 101, and then 25 to 50. Don't think they can really break the market today because of what's going on. Every place, the Emirates are no longer going to fly over Iraq's airspace because of the threat of missiles. Now, I understand the threat of missiles out of Iraq on approach and takeoffs and landings because they're shoulder fired. To shoot down something above 10,000 feet requires a much different missile, and requires training, requires a fairly sophisticated piece of equipment. And I don't know what the message the Emirates are sending to the rest of the world, but probably it's better to err on the side of prudence than it is to throw caution to the wind. Okay, sell 1 is going to be 75, sell 2 is going to be 102 and a quarter, 102.50, and we're really just picking up this support in this resistance area. The bias is lower, and again, I don't have any problem getting short. I just don't want to go home short on the close. We can open it up and get short in London when we see the lay of the land and what the news is. Okay, the euro was pretty quiet overnight, didn't break, didn't rally, just kind of sideways. But again, when you look at it, we're just not getting a lot of action. I like the sell side of the market. The economic news out of Europe shows a softening economy for the most part outside of Germany. The latest set of sanctions against Russia out of the EU are laughable from several standpoints. There is no principled stand, and the actual sanctions themselves are pretty meaningless. You're in a world surrounded by alligators, and you hope the alligator gets to you last. That's not a good game to play over time. Okay, we left wanting to sell into 50 yesterday. We had a sell at 40 to 50. Overnight session high is 46, so 45, 55, sell 1. We caught the sell really nicely, and we do a great job of setting you up for London time. Almost all of our recommendations really work based on London. We'll make 15 to 25, let them go a little lower, buy 1, and then buy 2 will be 34 plus or minus 5. Obviously letting them get stops below 34, and is the better trade, but we may not get down there. Should be fairly quiet as they await the FOMC announcement too. That affects their currency. Okay, everybody's favorite contract, the E-mini. E-mini's trading up. It definitely has a long-term up bias. The logic on the E-mini is that if we miss our economic numbers, the Fed will maintain its current support of the markets, buy stocks. If we beat our economic numbers, the economy is getting stronger, buy stocks. you don't wake up without reading how overbought and how old this bull market is. And it was like when we were coming up to 1900 on the E-mini, everybody was talking about 1900, 1950. This is it. Second quarter, into the second quarter would peak the market, and we're higher yet after the end of the second quarter. So nobody really knows. So we have 2000 as an obvious number. I don't see any reason anyway we can't make that number. And then the outlier right now, the outer edge, is 2200. And this number comes from, some people say we're within 10 or 15% of maximum overbought numbers that we've experienced before the market is corrected. So this one is within reach. This one, don't know what it takes to get there, but if the news doesn't get any worse than it is now, the Fed maintains its current posture, then we can get there. Case-Shiller, nobody will pay any attention to, plus 9.9. Consumer confidence, 85.5. Now, this isn't a number that, if it's greater than 50, shows an expanding economy. You got to remember this number has been as high as 144. So while improvement in this number is nice to see, it's got a long way to go before you get to where it was at its peak. Tomorrow's second quarter GDP, plus 3%, give or take, is where everybody is right now. Hard to see how they get to that number based on the actual economic releases that we've seen of late, but that is the target. FOMC unchanged. Now, yesterday, Fisher, who is generally regarded as a hawk, floated an article in the Wall Street Journal to make sure everybody read it, saying that we need to raise interest rates sooner rather than later. So the Fed is starting to pump those ideas into the collective mind of the market. So we need to look and see if we start seeing more Fed governors out there talking about raising interest rates sooner rather than later. The Fed is getting everybody used to that idea, where they might raise rates sooner rather than later. Hard to see how they can really do that, given what it does to the debt service costs over time. The other school of thought is that our country is really facing deflation and recession more than the rest of it, and the Fed can't do anything. They've created this world, and they got to play it out to the end. So second quarter GDP is probably the biggest number of the week for all markets. FOMC, do nothing, steady as she goes, and then Friday's non-farm payrolls. I'd like to see that north of 200K. So that does it. So my guess is we're a little higher today. We won't break the market out, so we'll make sell 1 79 to 81, and then 84.86 for sell 2. On the buy side, we'll make 70 72, give it a little bit of room for buy 1, and then buy 2 65 67. So trading range with an up bias, and if we fail to take out the 77 area, we're going to have to jump on the sell sooner. But they usually do a pretty good job of getting stops above the overnight session high, so I think we have time to get off a short. I do, as always, the 60 to 65 area represents much better support, and it's been an area where we've been able to thrive and do well on those particular trades. So 70, 72